Welcome to the fourth explainer in the Become a Lender series. So far, we've looked at why you should become a lender, or at least consider it, how loans work, how they get structured, what makes a good and a bad loan. And today we're looking at how we can get in on that juicy lending action ourselves. Hello, I'm Thierry, the Finance Hobbyist, and together with you, I'm on a journey towards greater financial freedom. There are quite a few ways for you to make your money work in a loan structure. I will highlight 3 of those here today in this video. The first is to become a lender to your network. And this is the most straightforward, but I think also the hardest way to do loans. So you have some extra capital and maybe you have got some friends or some acquaintances or, word of mouth spreads fast. And basically you want to help people out with their projects and of course get a return on that yourself. You both agree on the terms and conditions and so you're good to go, right? Not really. As we discussed in the previous video on the good and bad loans, you also have to look at what is allowed within your country. There should be a legal framework that kind of dictates the boundaries, the framework within which you can operate. And one of those rules may be that you need a professional license in order to be active professionally as a lender. Usually there are also some carve-outs for private lending to people and so on, but still you should be aware of that framework because the rules on loans will also apply to you. They will impact things like taxes, how much percent you're allowed to charge maximum, which documentation you need for all of it to be legal, consumer protection laws. And this is not a model that works for me. Don't misunderstand. Any friend of mine who needs a loan, I will consider it and will make things work out somehow. But it's definitely not my preferred model because I think there is so much that goes into private and business relationships at that point. It can become really messy when things do go bad and you have to consider, for example, legal options. The question here becomes really, would you feel comfortable suing your family or your friends for money that they can't pay you back? That's the real question here that you need to consider before you can turn this into a business opportunity. The second way to make lending work is to go via the bonds route. And buying bonds can typically be done via your stockbroker or via your bank. And your bank will most likely have access to the national bonds, so the bonds provided by your country. And they're very safe in general because they have a predetermined run rate and a predetermined interest rate. They're not very exciting, but when times are economically really bad, these can be a good option. And these bonds also often get packed up together, maybe as an ETF or as a portfolio of bonds that you can purchase via your stockbroker or via your bank. One more note on these bonds. Since they are so safe, usually the interest rates on these bonds will also be pretty low, right? So this is really a defensive financial instrument. Anywhere between 0 and 5% usually in a lot of European countries towards the lower end of this range. So whenever the economy is going well, you'll probably want to explore other financial instruments. But keep in mind, these are really great for when you expect the economy to take a bad turn. So the third way to become a lender yourself is to explore P2P lending platforms and become active there. These platforms provide retail investors like yourself and me with access to their loan book. You can basically buy some portions of their loan book. Whenever these companies get paid back on loans that they have issued, you get part of the principal and of the interest rate. And this is riskier than buying bonds, but it's not as risky as running your own lending business. When I discovered P2P lending, I was blown away by the percentages that they offered. Pretty often between 8 and 15%. So this is substantially higher than what you get with bonds and sometimes also beats out the stock market depending on how you invest there. But, and this is really important, not all P2P lending platforms are legit. So you kind of have to know a little bit which companies you can trust and which you should absolutely steer away from. So for here in Europe, I've done my analysis by checking their risk management, the willingness of those companies to pursue liquidation options when the borrower is not able to pay back the loan. And also important is their attitude towards you as a retail investor. Do they see you just as a bag of money, or do they actually value the trust that you give them? A good indicator of this trust towards you is how transparent they are on the risks that they are running on various loans. So you will always find loans that are in some kind of trouble, and you want to have really good information on that. If you have a platform that shies away from sharing this information, that's a red flag. It's guaranteed to happen. Some of your loans will default, and that's fine. It's part of the game. But it's really important to know what your P2P lending platform will do once that loan defaults, and what kind of efforts they'll put in to claw back as much money as possible for you. You want to have a partner, not someone who just uses you. I will make a P2P lending video where we get into more details in the future. But if you'd like to already get started, feel free to check the affiliate links down below. These are platforms that I use, so I've got skin in the game there as well. I've really tried to do my due diligence to figure out whether those platforms would have my best interests at heart or not. If you've watched this whole series so far, thank you so much, and also applause to you, because that now means that you are far better equipped to make rational decisions on whether loans could become part of your investment portfolio. Now, what can a lending portfolio actually look like when you've been investing for a while? In the next installment in this series, I will show you my own lending portfolio and share with you how it's grown to its current point and what I wish I would have known so that you don't have to make those same mistakes. Thank you so much for watching, and see you in the next one.